This is Martin from seekedge, the channel for learning about investing and trading. Welcome to our weekly technical analysis where we look at how the market did the last week and how we can plan ahead for trading for the next week. And this is analysis for the July 26th, Monday 2021, the week that is starting with that. So as usual, we will look at the different parameters that we had been looking at, like the candlestick patterns, the chart, all the different chart analysis, and then we will look at the open interest analysis and the global cues, and then we will come to a weekly wrap up. So let's get on to see what exactly happened. So what was the price action and the patterns in the market last week? So weekly bullish, a hammer candle on the Nifty, is what we can see on the weekly time frame. But at the same time, BANKNIFTY has a indecisive dodgy candle on the weekly, right? So which is contrary. There is indecisiveness in the BANKNIFTY and there is slight bullishness in the Nifty as per on a weekly basis. What exactly happened last week was, the Nifty had a V-shaped movement last week, right? Where 2.4% it fall and then recovered most of it. But BANKNIFTY also did the fall, but it did not recover entirely, right? It fell 4.5%, but recovered half of that almost. So the big fall and then big recovery is what happened in the market exactly last particular week, right? So on the daily basis, if you see, the Nifty has got a indecisive dodgy on the daily time frame, right? But BANKNIFTY has got bullishness. This is very contrary. Weekly basis, BANKNIFTY is indecisive, but daily basis it is bullish. Weekly basis, Nifty is bullish, but daily basis Nifty is indecisive. So it's contradicting kind of analysis is what the difference between the lower and the higher time frames that we can see, right? Anyway, let's proceed to the next point. So Bollinger Bands continue to be doing the consolidation or the volatility contraction. The very narrow ranges continue to happen. Last week we thought that it is going to expand and then it is going to break out. That failed, and then now it's continues the volatility consolidation movement in the narrow range. So that's the price action that happened in the last week. So the same things that we discussed. Let's see the charts. You can see that here you have it. Daily has a dodgy. Dodgy is uncertainty. The market does not know what to do. On the right side, BANKNIFTY, you can see that BANKNIFTY, the candle is very bullish. It's like the wick size and the on the lower part of the candle is showing the bullishness actually. Now this is the weekly basis Nifty and BANKNIFTY. On the left side Nifty, it is showing bullishness. But look at BANKNIFTY, which is showing bullishness in the daily, is now showing a dodgy indecisive candle. So this is what we explained. The Bollinger Bands, you can see that on the left Nifty is showing consolidation. On the right, BANKNIFTY again showing zigzag consolidation. Let's look at the support zones, support and resistance zones. On Nifty, you can see 15,500 and 15,650 is the support zone. After that, you have 15,250, 15,400. After that, you have 15,000. That is on the upwards. Resistances is the 15,850 and 15,950, and then after that, you have the rounding number of 16,000. Right? Then above that, based on the Fibonacci projections, you find that 16,150 may have some resistance. Right? So basically, the resistance remains the same for the Nifty. BANKNIFTY, how is it? 34,300 to 34,650 is the first support zone. Then 33,500 to 32,850 is the second support zone, and after that you have 33,000, 33,300 level as the. These are all Fibonacci 23, 38, and 53 levels. Confluence to that, you have these that acted as previous swing low levels or previous resistances, as you can see how it is mentioned below. Now the resistance for the BANKNIFTY is 36,500, which is the previous resistance, right? And then 37,700, which is the all-time high. So the two major resistance that you can see there, right? So that's about support resistance. Same thing you can see here, whatever we mentioned, that levels you can see. So you can see that we are in the same resistance zone where we had hit 5, 6, 7, 8, 9 times, right? We bounced from the same support zone where we had landed up 4, 5, 6, 7, 8, 9 times, right? BANKNIFTY same, the support zone is the same, the resistance zone is the same, right? You have three major previous resistances upwards before we make another all-time high in the case of Bank Nifty, right? Now let's move on to see what is the price momentum and what is the trend indicators telling us. So RSI momentum was bullish last week. It's given up and now it is in sideways. But on a median long term, that's weekly and monthly, the momentum is intact, still in the bullish zones on the Nifty. Now Nifty had a weekly bearish divergence which we talked about the last weekend. That is exactly what played out. No, actually it is supposed to fall till 15,450. That's what I said, but it is still halfway progress. It meant the target and bounce back. So it's still a valid momentum divergence. Is something that you would keep in mind. Now, Bank Nifty, the momentum again same. It gave up the momentum that was gained the previous week, and then it went back to the sideways zone. Right. Now, another thing is Bank Nifty lost the momentum and slipped to the sideways zone on the weekly candle also, but monthly still bullish. Now, on the ADX, the trend indicator, right, Nifty and the Bank Nifty, they both had turned to bullish zones. Now, both have closed out to bearish zones this week, right? But the higher time frames, bullishness remains there in Nifty and Bank Nifty with respect to the trend indicators. So the trend at the moment is clear to us, right? Let's move ahead. So this is exactly what we talked about. We are in the sideways on both Nifty and Bank Nifty on the daily. Trend also we have turned. We crossed over to the bearish here. We already crossed over earlier itself in the Bank Nifty. Left Nifty, right Bank Nifty. Now, having studied the charts and the analysis of the price and the patterns and the indicator and the momentum and the trend, let's move on and see what happened to the what was it, the open interest analysis for the monthly expiry that's going to happen on 29th of July, right? As per that, the futures contract information is showing that Nifty has got a long build up, but Bank Nifty has got a short covering. Short covering is bullish only. People were right, they were bullish, they were bearish, but they turned out to be long. So both are showing bullishness as per the option interest data. The highest open interest can be resistance that we can see on the Nifty is 16,000, right? Similarly, support is seen as 15,000, so 1,000-point range. But a substantial amount of call trading is also happening at 5,900. So 5,900 to 600 is the upside resistance area. Downside, you do have 15,500 and all, right? 15,800 also has got a lot of call trading. So 15,800 and 15,500, the lower side put writing support zone, you can say. Bank Nifty has got the previous resistance of 35. Yeah, so highest call trading are happening at 35,000. Highest put trading also is happening at 35,000. So there is going to be a lot of bull bear fight at the 35,000 level. Now, after that you have 34,500, which is also having put trading. So that also can actually support in case 35,000 is slipped. Now this is matching with what we are seeing in the charts, more or less, right? The put call ratio in the Nifty can be seen as 1.01, which is kind of bullish, right? But Bank Nifty, it is not bearish, but it's almost at the edge of that 0.94, which is improved. So overall, put call ratio, open interest all is giving a bullish picture in general. Now, with respect to the volatility, the India VIX has moved 5% overall. It is closed in a red, small body candle actually, right? You can see that it is 11.7. It's a historical only 2 or 3 times in the entire history of the market has, and the Indian market has got the VIX gone to that kind of levels, right? And also the IV of Nifty is 12.1, which is about 9.2, which is historical volatility. But IV percentile, if you see, it's 0.4. It's very, very low, Now, as per the OI, the supports also you have already seen. It's given in the bottom chart also. It's given that highest support is 15,000, highest. After that you have 15,800 also good support. The resistance you have 16,000 in the major support. Before that 15,900 also you have. Here 35,000 in the major writing and putting. So that is same the information that we have seen that earlier. These are the charts that indicates the information that we talked about, right? So let's proceed. Now let's try to see how the sectors are doing. So IT sector right now it's showing on a daily basis, it's showing a Greystone doji candle, which is very bearish. That is on the top, it's bearish. But actually IT momentum trend, everything, it is a very bullish zones, right? But daily it ended up on the top with the Greystone. That is what happened. So now there is also a bearish divergence on the weekly basis that we have talked about last 2 weeks. Still market is going up. So it is very bullish, but you have to be very cautious because Greystone doji on daily and bearish divergence. So there is a correction that may come, but the divergences are having large number of bars, so they may not be as effective like a small divergence, right? That is something you have to keep in mind. So you have to cautiously trade the IT sector stocks. Although very good momentum is in almost all the IT stocks. FMCG, you can see that it ended up with a weekly doji indecision in the FMCG, but actually the momentum has caught up and it is right. It is consolidating. Last week, what happened was it is mainly it was not doing much, and weekly as if you see it's the doji that is. So the momentum has to catch up on the daily basis also before we can look at the FMCG stocks, no ITC, except Hindustan Lever, ITC, and Godrej Consumer are all good picks. Now metal is having a bullish positive divergence that we are seeing in the last positive reverse divergence, which is very bullish. So we talked about that last week. Now exactly that is what happened. Metal moved up. Now all the metal all the time frames in the metal index, if you see, they are all they're having good momentum. But there is indecisive doji. That is what the weekly candle that we have. There is some indecision. The momentum is not fully picked up, but it is in the bullish zones. So all time, so metal can be seen as some as a bullish sector along with IT. IT has got some bearish early warnings things are there, but metal is not having that. It is just lagging little momentum on the short term. That's all. So auto sector is bearish. We have a M pattern double top on the daily as well as weekly forming in the formation. So it is clearly showing bearishness, right? Pharma is showing a small body green candle. So it's like kind of consolidation. It's bullish overall if you see. Like IT, it's bullish on all time frames. But the only thing is there is a bearish moment derivation that may work. So pharma and IT is bullish, but it is having some cautious corrections, small minor corrections can be expected in the short term basis, not near term, right? And metal. So metal also has jets. So IT. So apart from IT and pharma, you can say FMCG and metal is also bullish. So auto sector is the only one that is bearish. You can see. The stock picks for the next week. I have picked up two of them. One is ICICI Bank. You can see that there is an ascending triangle, which this is a daily basis candle. So this can break out at this level or before that also. Ideally, it has to be 3/4 of the entire triangle. So if it is, this looks like it is breaking out. So there could be a big move that can happen, right? So the moment you get that signal with this stop loss at this level, you can take the trade. Similarly, there is a rounding pattern that you can see on the Brokerage consumer FMCG. We are seeing that it is picking up, right? So that it is a rounding pattern. It can break out. So with the tight stop loss on the neckline, this can work out. Brokerage consumer products, it's FMCG, right? So ICICI Bank and Brokerage consumer products, two peaks for the next week. Now let us look at the foreign institution and the domestic institution participation last week. So this is very interesting. 5,400 crores worth of cash market selling happened by the foreign institutions last week. Last week alone. Overall, if you look, it's 10 to 12,000 crores of selling has happened in the last, this 1 month itself, you can say. Still market is holding because DIS bought 5,050 crores last week alone. That was the same thing happening in the previous several weeks. If you can see this bottom DI buying, so it's all green. They have been buying the entire month, and FII has been selling the entire month. FII selling heavily, continuously like this is a cause of concern. The last 2 days it was little less, but look at this 2,500 crore selling that happened 3 days before. So that kind of selling is what is making the market jittery. Now let us look at how the global markets and the gold and INR is using. So US market had a big fall previous week, but last week it was good news and US markets recovered. Everything recovered. Dow Jones, S&P 500, Nasdaq all recovered. Even the European markets also recovered out of the COVID fears actually. The panic selling is over, which is good for our market also. Right? So the dollar index is strengthening. When the dollar is strengthening, there is a breakout W pattern on the weekly basis that could happen. Now crude oil had fallen earlier this week, but recovered everything and bounced up again, which is not good for economy in general. Right? Now the USD INR currency pair actually is consolidating and facing some kind of resistance. It did a 1% fall after going very close to the channel top. So what is on the top is the USD INR. Right, you can see it's almost near the channel top and then consolidating and resisting. So it can continue to do that. So Gold also is in a channel, right? But it's moving up, and then the moment is. But last week it actually slightly corrected around 2%, and but it's heading upwards is what we can see. Because in the upper half of the channel is what it is moving, and it has been trending with very slow momentum, right? That is about global markets and the USD INR. Now, actionable, if you look, the thing that everyone knows is that the India VIX, the volatility has gone to 11.7, very low level. The fear that everyone has got that how long this is going to be in this level, since it is mean reverting nature, volatility could spike up. It did attempt two times to spike up to go to near to 14 level. That is when the big falls happened two times. The two zigzags that happened in the July month itself is because is when the VIX attempted to spike up. So the VIX can't spike up when it is at this low. Is a concern, right? It's good thing for the buyers, but option sellers who has taken positions can get surprises if the VIX spikes up suddenly just like that, right? So calendar spreads and and double calendar and things like that would be a way of playing the options in such an environment where it is fake opposite, right? So accordingly, there is a calendar spread strategy that is given as an actionable. This is for the Bank Nifty 35,000 call, which is having good risk reward. If you see one is to one kind of risk reward, but probability is little less because it's at 35,000. But I'm putting this because I'm bullish. Market Bank Nifty could move up. It's a long way for Bank Nifty to hit the top section of the Bollinger Band. So until at least till the next resistance, it is supposed to move up, is what I am believing. Which will happen the next week. So the break evens are at if it is not crossing 35,500, it's good, and if it is not falling below 35,600, if it is remaining in that range, if the break evens before the break evens are hit, you can shift, you can book the profit on one side and then shift the falling side, the non-tested side, and then you could do the adjustment and then try to get a little more wider range if required. Otherwise, you'll have to come out at a small loss. This is for one lot, right? Look at the margin; it's hardly 23,000, right? And the risk reward 1:1 is good enough, right? Provided you would believe that the market is going up, and the current supports that we have is going to hold good, right? So just to wrap up on all the discussion that we had for the last 20 minutes, right? So the markets did fall surprisingly, without being able to conquer the resistance of of 5950 levels, and then it fell down so much to the 15600 levels, and so much of fall happened, and then it got bought and then it bounced again, as it was happening several times now in the last 30 trading days. So it has got strength, market has got resilience, and it has got strength. It's not going to fall just like that, right? So that is a good thing, but the thing is that will it continue this zigzag for a long period of time, or is it going to break? So there is a bearish weekly divergence that was there last week. It continues to be there now. There is Fyers selling heavily, which continuously, not heavily, continuously selling is a big concern, right? Overall bias, if you see, it's bullish. The open interest are saying bullish. Bullish recovery happened both indices, right? Although the momentum and trend is gone to sideways and bearish and all that last week, right? As compared to the week previous to that, the overall bias is slightly bullish, not fully bullish as it was last week, but just be cautious bullishness. That is what I would say. Right? As we discussed, index is at a very low level. There can be a spike that can happen. So you have to be cautious when you are selling the options, right? And personal trades, we still have not broken 15,500. So we still have not broken 15,000. So positional long-term players does not have to wait. Sorry, until the breach of the levels, major support levels that is holding the market is gone. Till then, they can stay in the game. But intraday traders, as I always say, has to trade purely based on price action between the highest point of previous day, the lowest point of previous day, right? So that is a wrap up. I hope this 20 minutes talk gave you a reconciliation of what exactly happened in the market last week. What was your understanding, and what must be matching with what we talked about the charts and the data from the open interest. So you should have got a very clear picture on what happened. Now, The trading plan is yours, it's not ours or mine, right? So you have to frame based on these inputs your own trading plan as per your risk capacity and as per how the market, we have to react to what the markets, and not to anticipate. Now, we know this happened last week. We we learned that there is a probability that this may happen, either this side and that side. So depending on which side, what markets give, you react to that. That should be the way you have to be trading. I hope it helps, and if you like it, hit the like button. Please share to your friends, colleagues, and maximum number of people. We have very few subscriptions, and we need more subscriptions to continue doing, good videos. Continue doing the same. Right. So please help motivate us by subscribing and sharing to maximum number of people. Right. Hope it helps, and happy trading and happy learning. Bye.